Hello and welcome back to the Market Bar, your go-to source for AI, crypto and finance. Today, we're answering one of the biggest questions in investing. Is Apple, AAPL, a good investment in 2025? Apple has been a dominant force in the market for years, but with increasing competition, regulatory challenges and shifting consumer demand, does it still have what it takes to be a strong long-term investment? Right now, as of recording this video, Apple's stock is trading at around $244 and it's showing steady growth. But key developments could impact its trajectory. Apple recently unveiled the iPhone 16e, a budget-friendly model aimed at boosting sales in emerging markets. The company has also introduced its first custom-designed modem chip, reducing reliance on Qualcomm. However, Apple faces new regulatory challenges, including a potential 10% tariff on imports, which could impact profit margins. In this video, we'll break down Apple's market position, growth potential, and key risks, along with what analysts are saying about AAPL in 2025. And if you're thinking about investing and you're based in the UK, check out Free Trade, a user-friendly platform where you can grab a free share worth up to £100 just for signing up and funding your account. The link's in the description. Let's get started. Apple is one of the world's most valuable and recognizable companies, known for its innovation, strong financials, and global reach. But what makes Apple such a strong investment heading into 2025? Apple's strength lies in its diversified income sources. While iPhone sales remain its biggest revenue driver, Apple has expanded into high-margin services like Apple Music, iCloud, the App Store, and Apple TV, bringing in consistent, recurring revenue. With over 1.2 billion active iPhones, Apple benefits from a massive customer base that continues to spend within its ecosystem. Apple holds tens of billions in cash reserves, giving it flexibility in economic downturns and enabling aggressive investments in R&D. This allows Apple to weather supply chain disruptions and inflationary pressures better than competitors. Apple is targeting India and Southeast Asia, where smartphone adoption is growing. The launch of the iPhone 16e, a budget-friendly model, could help Apple capture more market share in regions where premium iPhones have traditionally been too expensive. Apple is shifting toward in-house technology, reducing reliance on external suppliers like Qualcomm. The first custom modem chip is a major step in boosting margins and improving performance. Apple is also working on AI-powered software enhancements and next-generation AR and VR devices like the Vision Pro, which could open new revenue streams. Apple's brand loyalty, financial strength, and innovation pipeline make it an attractive long-term investment. However, even a company of Apple's stature faces challenges. Despite its strengths, Apple faces several key risks that could affect its stock performance in 2025. Apple's premium smartphone market dominance is being challenged by Samsung, Google, Huawei, and many more, who offer high-end devices at lower prices. Additionally, the Mac and iPad businesses face increasing pressure from Microsoft, Lenovo, and Dell, particularly as AI-powered PCs become more common. Apple is facing antitrust scrutiny in the US and Europe, particularly over App Store policies and how it handles third-party payments. If regulators force Apple to reduce its commission on fees or open up iOS, this could significantly impact services revenue, one of its highest margin business segments. While Apple is working to diversify its supply chain away from China, production is still highly dependent on Chinese manufacturers. Tariffs, geopolitical tensions, and trade restrictions could disrupt supply chains, increasing costs and causing potential product delays. With high interest rates and inflation impacting consumer spending, there's concern that Apple's premium-priced products may see weaker demand. If global economies slow down, consumers may be less likely to upgrade their iPhones or subscribe to Apple services, affecting revenue growth. While Apple is investing in AI, it remains behind Microsoft, Google, and OpenAI in the AI race. The success of products like Vision Pro and Apple's AI-powered innovations remains uncertain. While these challenges are real, Apple has historically navigated market shifts effectively. So what do analysts say about AAPL in 2025? Opinions on Apple as an investment remains divided, with some analysts bullish on continued growth and others concerned about valuation and slowing revenue expansion. Some analysts remain optimistic about Apple's future. The company's services division is growing, providing high-margin, recurring revenue from subscriptions. However, not everyone is convinced. Some analysts argue that Apple's valuation is near all-time highs, meaning future growth may already be priced in. Apple is currently trading around $244, and while some argue that Apple deserves a premium valuation, others worry that investors are paying too much for future growth that may not materialize as expected. For long-term investors, Apple remains a solid choice. However, if you're looking for high growth opportunities, other emerging tech stocks may provide stronger upside potential. Apple is a fundamentally strong company with consistent revenue, brand loyalty, and cash reserves that make it a reliable long-term investment. However, investors should consider its valuation, competition, and regulatory risks when making decisions. If you're looking for a stable, blue-chip stock with steady returns, Apple remains one of the safest bets in tech, but this is not financial advice, this is just my opinion. And if you're looking for high growth opportunities, you may find better returns in emerging AI and semiconductor stocks. Like any investment, it all comes down to your personal risk tolerance and investment goals. So, what do you think? Is Apple still a good investment in 2025, or is it time to look elsewhere? Drop your thoughts in the comments. And if you're looking to start investing, check out Freetrade. It's an easy-to-use platform for UK investors, and you'll get a free share worth up to £100 just for signing up and funding your account. The link's in the description. Don't forget to like, subscribe, and turn on notifications so you never miss our deep dives into AI, crypto, and finance. Thanks for watching, and I'll see you next time on The Market Bar.